Okay, let's be real. We've all been there, or at least we know someone who has. That heart-in-your-throat moment when you sell your investments during a market nosedive, only to watch it start climbing right back up without you. It happens. But you know what? The real question isn't about what you did, it's all about what you do next. So let's get into it.
And this is probably the question that brought you here, right? You saw that red on the screen, you felt that knot tighten in your stomach, and you hit sell. And now you're sitting on cash, watching the market do its thing, and wondering, did I just make a massive mistake? It's a really tough spot to be in, but trust me, it is far from the end of the world.
It's so easy to feel like the game is over, and you've already lost. But here's something you absolutely have to remember. That sale, it isn't the end of the story. The damage might feel incredibly real right now, I get it, but it doesn't have to be permanent. There is a way back from this.
Because this is the core idea we need to get our heads around. That decision you already made, the panic sell, that is not the biggest mistake you can make here. No way. The real danger, the one that can do way more damage to your wealth in the long run, is the mistake you might be about to make.
So, let's put these two mistakes side by side. On one hand, you have the panic sell. That's in the past. It stings, no doubt about it. But on the other hand, you have the second mistake, staying out of the market completely, waiting for that perfect moment to jump back in. And that, well, that can be way more costly. Why? Because markets almost always recover faster than our fear goes away.
So how do you avoid making that even bigger mistake? You need a playbook. Not another emotional reaction, but a clear, simple, and actionable game plan to get you back into the market methodically. And that's exactly what we're going to build, right here, right now. All right, so here it is, the playbook. It's just 4 simple steps. Number 1, acknowledge and learn. Number 2, re-enter systematically. 3, focus on quality. And 4, commit for the long term. Let's break down exactly what each of these means, starting with the first one.
Step 1 is all about mindset. You just can't move forward if you're stuck beating yourself up over the past. So you have to accept the loss. But don't just forget about it, reframe it. Think of that loss as the tuition you just paid for a masterclass in emotional investing. It's an expensive lesson, for sure, but it is a powerful one you will never forget.
Okay, once you've got your head in the right place, it's time for some disciplined action. This is step 2, and it's all about how you get back in. There are 2 really simple, really powerful ways to do this. If you had a regular investment plan, like a SIP, restart it immediately. Don't wait. If you have a lump sum of cash sitting there, you get back in using stages. The goal here is to prioritize time in the market, not waste time trying to time the market.
So what does this staged approach actually look like? Super simple. You take your lump sum and you just divide it into 4 equal chunks. You invest that first 25% right now, today. Then you literally set a reminder on your phone and you invest the next 25% in 3 months. Then the next chunk 3 months after that, and so on. This completely removes the anxiety of trying to nail the perfect bottom. You're just averaging your way back in, which is a much, much smarter strategy.
Now for step 3. Where does this money actually go? To rebuild your confidence, you want to start with stability. That means focusing on quality, large-cap mutual funds. These are the funds that invest in the big, established, generally more stable companies. Think of it like getting back on a bike after a fall. You start on a nice, smooth, paved road, not some crazy, risky downhill trail.
And that brings us to the final, and maybe the most important step of them all. Whatever you invest in now, you need to make a commitment to hold it for a minimum of 5 years. This number is so important. It forces you to shift your whole mindset from being a short-term gambler to a long-term investor. And that, right there, is the ultimate antidote to panic selling in the first place. So when you put all of these pieces together, you can really see the path forward. This whole painful experience, it wasn't just a failure. It was a catalyst. It's the very thing that can transform you from someone who reacts to fear into someone who operates with a plan. This is how you build real, lasting investing discipline.
And this is the key takeaway. It's not just about getting your money back. It's about upgrading your entire investing brain. The mistake is done. It's in the past. But the lesson, that's what you carry forward. And that lesson is what's going to protect you and help you grow your wealth during the next market downturn and the one after that. So, the tuition has been paid, the playbook is right here in front of you, the only question left is the one on the screen. Your lesson is learned. What's your next move?